What's up, Facebook? Ty Crandall here with Credit Suite, and today we are going to decode business credit scores. So a lot of stuff we've done on our live stream so far. We first started back here on this whiteboard. We mapped out everything to do with business credit. We mapped out the benefits of business credit, the steps to build business credit, and decoded the whole thing for many weeks. Then we jumped in the last few weeks over here to business loans. We talked about 3 different ways you can get business loans when you cannot get business loans at your bank. And we spent many weeks going through those. Now we've jumped into credit scores. And so far we've had the opportunity to talk about your bank credit scores and how your bank credit scores work. Today we're going to be talking more about business credit scores, and I think next week we'll be diving more into consumer credit scores because I don't think we've been there yet. So today, let's decode how your business credit scores work. Guys, look, this is really important. It's as simple as this. If you own a business, if you're thinking about starting a business, then your business credit scores are as important to your business as your consumer credit scores are to you as a consumer. They will determine whether you will get business loans. They will determine if you'll get a credit line. They will determine if you will get business credit cards, and they will determine the amount that you get approved for and the terms that you pay. It's as simple as that. So I had a conversation with my own personal banker at Regions Bank yesterday, and we had the same conversation. And one of the things she was mentioning is that even to get ACH payments, even to receive ACH payments, to get approved for even small credit cards with them, they look at your business credit score. And based on that credit score determines whether or not they approve you or not. So think about this, and we've seen this happen. We've seen companies that do $3-4 million in revenue that get denied for $10,000 credit cards, even though the owner has excellent personal credit. How does that happen? It's simple. Because they're pulling the business credit score, seeing nothing established or seeing a low score, and they're denying the person for that, okay? As a matter of fact, I have just gotten my folder the other day, 8 denials from business loans of people that applied and got denied because their business credit scores were not high enough. Guys, these were merchant cash advances. These are 30-40% interest loans. The highest risk, highest rate loans that exist are also based on your business credit quality and your business credit scores. So what we're going to talk about today will literally determine your future as a business owner. If you have bad business credit scores or have no business credit scores, then you will suffer a tremendous fate because you will not get loans, you will not get credit cards, you will not get credit lines until you establish that business credit, until you get good business credit scores. And that's what's important to know, is that I pull a lot of reports on these live streams. And one thing that we commonly see is that Experian will give you a low score of about a 27 to a 29 score. They will give you a 27 to 29 score if you have no credit and they know you exist. So it's a big problem. So it doesn't take bad credit to have a low score. It takes no credit to have a low score. Guys, think about it like this. Experian, Dun & Bradstreet, Equifax in the business world, Experian, Equifax, TransUnion in the consumer world. The business credit reporting agencies do one thing. They sell data. They collect data, they sell data. Right now, I'm in conversations with Credit Safe. Well, let me give you an example. I'll give you 2 examples. First of all, as of yesterday, I'm moving forward with Credit Experian to have all of our customers report to the business credit reporting agencies. So when they enroll with us, we will report those payments to the business credit reporting agencies, helping them establish business credit just by using our services. Pretty cool. Today, I got a call from Credit Safe, and here was the thing. They're negotiating with me to get new credit reports, right? Because we use them to pull credit reports. And I said, look, just give me my pricing for last year. And they said, let's talk about this first. Their negotiation, you know what they wanted? They wanted us to report the information that we have on our customers to them. Hey, Paula, welcome. So guys, this is very important to know. The credit reporting agencies, all of them, they thrive, they live on data. They need to get data from you, from anybody they can, and then they sell that data in a number of different ways. They sell it for people that are doing marketing lists. They sell it for people that are doing all different types of things. So the credit bureaus, business and consumer, have one primary goal, one primary mission in life. And that mission of the credit reporting agencies is to gather data and sell data. So because that's their primary mission in life, they're really, really good at it. Which means if you go to lease a place or rent a place, if you get a utility like an electric bill set up or a phone set up in your business name, what happens is these companies commonly tell the business credit reporting agencies that you're inquiring, and boom, you're on their radar. The minute you're on their radar, they populate a credit report for you. They create a credit report for you. And once that credit report is created, places like Experian Business will then actually give you a score, even with no credit. So let's say you go and you set up the electric for your business. The electric company reports to Experian. Experian now knows your business name and your business address. Remember, that's all that's needed to start a business credit report. They don't need your EIN. They need nothing other than your business name and business address. Now they have your business name and address, and then what they do is they create a credit profile for you and instantly give you a 27 to 29 score. That's how it works. With no credit, you still have a low score. And I'm going to try to go here real quick and see if I can pull up one as an example. So even with no credit established whatsoever, you're going to have a low score because the credit bureaus know you exist, even if you have absolutely no credit reporting. So this is important to know. What you're learning is that, first of all, the credit reporting agencies get data from all different types of places. And guys, they're very, very good at getting data. And if you see my eyes going all over, I'm trying to pull a business credit report to show you an example right now. So they're very good at pulling business credit. They're knowing that you exist. Once they know you exist, the next problem is that places like Experian will instantly give you a low score just because they know you exist and you have no credit. You can't hide from them. So you've got to build business credit, because if you don't build business credit, then ultimately what happens is you're ultimately in a position where you're going to have a really low score because they know you exist and you have absolutely no credit. I'm trying to pull an example of that to show you right now, and I will do that on this live stream. I just got to find the right company that fits this criteria. So again, what you need to know, the credit reporting agencies know you exist. They get their data from all different types of places. Once they know you exist, the problem at that point becomes that they're ultimately going to give you a low score just because they know you exist and that you have no credit. You cannot hide from this. So you need to make sure that you build your business credit scores, because if you don't build your business credit scores, then what happens is you'll instantly have a low score and be unlendable at most banks as a result of that. And I can't seem to find... I will find an example, but I will show you another example. Christine, you're on with us right now. Christine said, I know my Experian tanked for the last month because of all the new credit that showed up and no payments. Well, actually, this is what Christine was talking about. But Christine, your scores are actually still pretty good. And by you considering them tanking, it's dropping to a 73 versus about 100. Pull up my other company, Upscale, D-Tables, and Akron if you want to. I might do that here in a second. So again, remember guys, this is what matters. On every credit report, there's a recommendation of credit that you're seeing right here. And this recommendation of credit has to do with how much business credit you have and how high your scores are. So whenever you go into a bank to get a credit card credit line, whenever you apply for a merchant cash advance, they pull this just like I pull these, and then they see how much you're being recommended. This ties into how much you'll get approved for. Your score determines the rates and terms that you'll actually. So business credit scores are very important. Like I said, they determine whether you'll get loans, whether you get credit cards, whether you get credit lines, etc. And they'll also determine the rate that you'll pay. And some point here, I will find an example of somebody that has absolutely no credit established and still has a score, because I think it's important for you to see that. So hopefully you'll be patient while I try to figure this out. If I can't, then we'll go to the whiteboard. So we're going to go to the whiteboard here in just a second, and I'm going to give you some training on how the business credit scores work, because it's very important for you to know exactly how they work, so you'll be able to determine what your scores are, and you'll be able to have the best scores you can get. I'm going to try a couple more here just to see if I can find a company that has no business credit reporting yet, but I can't, so I will have to get back to that probably another time, which I will do. So we'll come back to this probably another time, because I've got to pull some business credit reports and I can't see for them to give me more. Anyway, so we'll come back to this. So to the whiteboard, Christine, and I might pull up that company here in a second and take a look at that. So, but that company has credit, so it won't be a good example of this. So let's go to the whiteboard. So what you need to know about business credit scores. Well, first of all, let's start with the fact that there's 3 reporting agencies. There's D&B, Dun & Bradstreet, okay? There's Experian and Equifax. I call them Equifax and Experian commercial, although it's not formally their name. You will see them call them Business Experian or Business Equifax. Sometimes I call them Experian Business or Experian or Equifax Business. But this is their commercial divisions. There's 3 reporting agencies you should care about. The first one we're going to talk about today is the most commonly used credit score in the business world. It's called the D&B Paydex score. There are 2 components to Paydex. It's pretty simple. What you need to know is the first has to do with your payment history. The second has to do with what is called a weighted average. So, first of all, D&B's Paydex is primarily based on how you pay your bills, okay? So, for example, if you pay your bills early, as soon as you basically accrue the debt, let's say, you get a 100 score. We've seen Christine's score, I think, be at 100 on these live streams. If you pay within the discount period, you get a 90. If you pay on time, you get an 80. If you pay 14 days late, you get a 70. A 50 score means 30 days beyond terms. A 20 score means 120 days beyond terms. And UN is unavailable. So here's what's important to know. I can tell you exactly what an 83 means, exactly what a 52 means. The number literally reflects how early or late you pay your bill. So, for example, somebody was saying, hey, look, my Paydex is 80. I need some revolving credit, but everyone will still run my social and won't even entertain the idea of running it with MIEIN. What's next? Great question. Here's what you need to know. The score doesn't matter. The trade lines do. It's as simple as that. A lot of people come to me and say, I have an 80 Paydex score. Congratulations. That literally means you pay your bills on time. But it's not the score that matters. It's the trade line that matters. So, Daryl, if you ever want to get to store credit, you have to have 5 credit accounts reporting on all of the reporting agencies. If you ever want to get to cash credit, fleet credit, you need to have 10 accounts reporting across all 3 reporting agencies. If you don't have the trade lines, the score doesn't matter. You can get the D&B 3 trade lines, you can get an 80 score with D&B. But the problem is that that doesn't mean that you have enough credit to qualify for the next step. 5 trades to get to store credit, 10 trades to get to fleet credit and cash credit. Those are the requirements. The score does matter, but what matters more is the actual trade lines. And remember, you can force anybody to make a decision based on your EIN credit alone without your social. Even if they tell you it can't be done, you insist that they do it, and in doing so, they will pull and make the decision based on your business credit quality. But if you're trying to apply for store credit with less than 5 accounts, you won't get approved. You got to have the 5 and 10. So let's go back and look here, and I want to give you an example of. So when we look at FICO's score, for example, FICO works like this. Your payment history is 35% of the score. How much utilization or your revolving credit is 30% of the score. The length of time you've had credit is 15%. New credit's 10%. Credit mix is 10%. This is very convoluted and confusing. And let me show you an example. Let's say you don't have any accounts, so you don't have any positive payment history. So you want to add accounts to get positive payment history. That damages the new credit section of your score, okay? Let's say that you don't have a good credit mix and you get a mortgage and you get an auto loan. That immediately damages the new credit section of your score, and it damages the utilization section of your score because you're getting new loans that you basically owe what you borrowed. The way that the FICO really works, almost, if you work on improving one aspect of the score, you damage another. You work on fixing this, you damage this. So because of this, it's very difficult to get a really good score. Guys, this is why business credit's so awesome. Your score is basically only based on how you pay your bills. All you have to do is get credit that reports to the business credit reporting agencies. And remember, we talked about some starter accounts you can use: Uline, Quill, Monopolize Your Marketplace, Gimp, or Seton. So you get these kind of credit accounts, you buy stuff, you pay the bill as agreed, they then report the credit over here to these guys. And then when the credit reports to D&B, D&B will give you a score based on how you pay. So all you have to do is pay your bill on time or early, and that will immediately give you an 80, 90, 100 score. That's all it takes is paying your bill early. Isn't this much easier than FICO? Look at this. This is hard to control with all these factors. What's up, Lawrence? Welcome to the stream today. But with D&B, it's super simple. All you have to do is pay your bills as agreed and you get a good score. It's that easy. This is why people love building business credit. And this is exactly why I say one of the biggest benefits of business credit is that you get credit fast. Because what happens is the minute these kind of accounts, vendor, store, fleet, cash, report, they give you a great score. Thanks, Lawrence. I appreciate that. So that's all it takes. You get credit that reports to the business credit reporting agencies. They report, okay? You pay it on time. You get a good score, and then with the good score, all these kind of stores will start to approve you for high limit accounts. So that's the process of how business credit works, and it's so simple to do because all you have to do is get bills and paid as agreed. D&B makes it simple because their score is primarily based on payment history. And Christine says, so how do you go about getting good personal credit and not blow things out of the water? And what would you recommend as far as establishing good personal credit? Well, good personal credit is really based on, and you know what, Christine, we're going to talk about that next week. As a matter of fact, I'm going to jump in and answer all those questions next week because we're going to decode a lot to do with consumer credit. As you can see, all of this has to do with consumer credit. So we will decode that next week. I'll give you some tips. I'll give you some new credit sources that can really boost your score as well. We'll dive into all of that next week. Now, it is primarily based on your payment history, but not all based on it. There's something called weighted average, which is the second aspect of D&B's score. And the weighted average, that the account that has the highest limit matters the most. So let's say you have a $1,000 credit card limit and a $10,000 credit card limit. Well, the way that D&B's weighted average works is the account with the $10,000 limit will weight higher into your scores than the $1,000 limit credit card. This is also done through what are called credit scorecards, which we'll talk about next week in the consumer world. In the consumer world, there are credit scorecards based on what industry you're in. So for example, if you go to get an auto loan, you're going to have a different score than if you get a mortgage loan. That's because an auto loan weighs your auto history heavier into the score than a mortgage company, which weighs your mortgage history heavier into the score. We'll decode all that next week. But it's the exact same thing with D&B's weighted average. They weigh your highest limit accounts heavier in your score than your lower limit accounts. What this means is it means if you're ever going to go late on the smallest limit account first, because that will have less of an impact to your score, adverse impact to your score, than a higher limit account will. That's what weighted average means. Hey, Coach, or hey, Paul, welcome. So that being said, I appreciate the comments, appreciate the engagement, appreciate the likes, appreciate the loves, appreciate the shares. That means I'm on the right track here. So let's go back. The D&B, most common used score in the credit scoring world, the Paydex score. 2 factors you need to know about: how you pay your bills, which will determine the good score, your goals to get an 80 or higher. Most credit sources will approve you with a 75 or 70 or higher, which means even if you're 7 days late, you're going to be good. But of course, you want to pay it on time or early. And if you're ever going to go late, you pay the lowest account first because of the lowest limit account is the last one you pay. You pay the highest limit account first because that will give you the highest score. So that gives you an idea of D&B's credit scores. Now, we don't stop there. D&B has about 4 other scores you're probably going to see on your report. And I didn't map all these out because we could go for hours if we dissect all this stuff. The delinquency predictor is just that. It really predicts your possibility of you going delinquent in the next 90 days. The financial stress score, all 3 reporting agencies offer some variant of this. This is called a bankruptcy score. This depicts your risk of potentially going bankrupt in your business. So that's all of the reporting agencies have a similar score. A supplier a SIR rating is a supplier score. This is for somebody that uses suppliers, so they rate how well you pay suppliers. A D&B rating, guys, very important. You need to know this. Very important. And I might dissect these in the weeks to come. The D&B rating has to do with the financial health of your company. So here's if D&B has your financials, if they have your business tax returns, which they can get, as anybody can get online, okay? So if they have that financial data, then, or you can submit it to them, then what happens is then at that point, they will base your score based on the financial health of the company, your revenue, your profits, etc. If they don't have your financials, then they look at other things in lieu of your financials. So if you have good financials, it makes sense to contact Dun & Bradstreet and give them the financials. It'll give you a higher D&B rating, which will help you. You can easily control that. So now you know about 5 credit scores that D&B has, with the Paydex score being the most. Let's talk about the other guys. So here's the Equifax credit risk score. It again is based strictly on payment history, okay? 90 means you pay as agreed. 80 to 89, 1 to 30 days overdue. 60 to 79, 31 to 60 days overdue. 40 to 59, 61 to 90 days overdue. 20 to 39 score, 91 to 120 days overdue. 1 to 19 means you're over 120 days late. Okay, and Christine says, I never had a D&B rating. How long does it take to get? You can get a D&B rating if you send them the financials. They'll score you very quickly. And if you don't have a D&B rating, it's probably because they don't have your financial data from your company, which is very common, Christine. A lot of companies don't. I'm giving you that hack to know that you can give D&B your financials and get a positive D&B rating if your financials are good. If you don't, then just ignore it. Don't give them your financials, because then I'll give you a low rating. But it's not a big deal. Most of them are going to pull Paydex. Not a lot of them are going to make the lending decision based on D&B rating, but if you have a good financials, then send them to D&B. Get a good D&B rating, you might as well. If you don't deal with suppliers, you don't care about your SIR rating. If you're paying all your bills as agreed and have good financials, your financial risk, stress score, and delinquency predictor will be good as well. Remember, just paying your bills good with D&B will give you a good score here and a good Paydex. And then your financial score will take into account financial risk. So if you have good financials, that'll give you a good D&B rating and a good financial credit score, stress score with D&B as well. And you don't care about this unless you're dealing with suppliers anyways. So back to Equifax. Equifax's credit risk score, very big, guys. This is used by a lot of banks. You know, a lot of banks use Equifax credit risk score. Here's how it works. Primarily the same thing. You need to have a 90 if you're paying as agreed plus to have a good score. That's where you want to be. But notice the commonality between these two right here. All you have to have a good Equifax score, which is what most banks pull, and D&B, which a lot of sources pull, is pay your bills on time. It's so simple. You get accounts that report to the business credit reporting agencies. Remember, 97% of trade accounts don't. You need to be intentional about building business credit. Get accounts that report, pay them as agreed. You'll instantly get a good Equifax and D&B score. So that helps you with a lot of things, including bank loans, a really big deal. So other things to know, Equifax has a credit risk score for suppliers, the same as the SIR rating for D&B. Okay, so this is for suppliers to use. Okay, and the business failure risk score, the same as the financial stress score from D&B, as I mentioned. All these guys have a score that's used to depict your business going bankrupt. And that bankruptcy score takes a lot of things into account, but it primarily takes into account your payment history and your financials. So if you have good payment history, that's going to help you with this business failure score. And if you have good financials, it'll really boost this business failure score. But primarily what you need to know, the two guys here, D&B and Equifax, your scores are based on payment history. All you have to do to pay your bill is pay your bills on time. You get a good score. So let's jump to the third. This is very commonly used. Experian IntelliScore. And that's what we looked at here just a second ago with Christine's. No, don't log me out. Don't log me out. Okay, so when we looked at this, for example, with Christine, this is IntelliScore. And here's that financial stability risk score I showed you, okay? So low risk, low risk. So here's that IntelliScore on a real credit report. Here's the financial stability risk score. Here's a breakdown of this. Okay, here's what it looks like on a credit report. It says that factors that affect the adverse score, okay, which I love this type of thing because what she's saying is that she hasn't had a lot of credit yet. Okay, she has a ton of credit but hasn't had a lot, which is one of the things that affects the score. You can see here she's low risk, risk factor 2, okay? Here's risk factor 1, the lowest risk you can get. So Christine, even without your financials, they're still putting you at a super low risk here on the current financial stability risk score. And you can see the risk factors that affect that. The number of account that you've had, the employee size. I love this, guys. This means she doesn't have a big business, but yet she's already got $160,000 in business credit. Actually, she's up to about $170 now in business credit just in the last 90 days. And one of the reasons she scored low is because her employee size. So that means she's not a big company, but she's still obtaining massive amounts of business credit. Her risk is low. Because her risk is low, she's being recommended for a lot of money from the reporting agencies. This is our goal for all. Was it populated? This one, I think, was the last one. Let me look and see this one, when this was, Christine. This was actually last month. I just pulled up your most recent one just a second ago, though. So, to Experian. Let me grab my Sharpie here. So, Experian's a little different, guys. Experian isn't strictly based on payment history. Experian is actually based, kind of like FICO, on a bunch of different stuff. So let's look at how this sucker breaks down. This is IntelliScore, and I want to show you something that's very important as we go through it. 50 to 60% has to do with the payments you make on time or not, how late you pay, and the balances you have on those accounts. 10 to 15% has to do with your utilization. Derogatory items account for 10 to 15% of the score. Historical behavior, what you've done, payments in the past, accounts for 5 to 10%. The age of your business, the industry that you're in, the size of your company, all have to do with 5 to 10%. So there's a lot of factors here that look at IntelliScore, but here's what you need to know. Look at this. Let's take the high end here. 60% is payments. Derogatory items has to do with how you pay your bills, right? If you think about it, if you pay your bills, you don't have any derogatory. That's 75% of the score. Historical behavior, how you've performed historically with your payments, is 10% of the score. So even though there's a lot of factors to IntelliScore, if you add this up, payment history 60%, has to do with payment history 15%, has to do with payment history 10%, you find that 85% of IntelliScore has to do with payment history, and the other has to do with stuff like age, industry, size, and utilization. So, with all three of them, payment history is what matters most. With D&B and Equifax, it's 100% of what matters. With Experian, it's about 85% of what matters. Utilization, age, size of your business does have a factor, but 5 to 10%, it's not much. So with all of them, payment history matters most. This is what's beautiful about business credit. What's beautiful about business credit is all you have to do is get accounts that report to the business credit reporting agencies, pay them as agreed. That gives you the good score. You use the good score to springboard he's done and Mark, who's commonly with this, and get these kind of approvals. So Christine just got a cash credit card, which I haven't added to the board here, for $7 grand. So let's look at this process, and I'll even show it to you on a credit report too. So you come in and you get vendor accounts. Well, first you set up the business credibly, right? Then you get your business credit reports and fix them to see if you have anything negative there. You get these guys, these suckers here that report to the business credit reporting agencies. You buy shipping supplies, you buy paper, Seat and I buy batteries, Gimpler's I buy batteries, Seat and I buy first aid kits. You buy the stuff, you pay the bills, they report to these guys, D&B, Equifax, Experian. You pay the bill earlier as agreed. With each reporting agency, you get a good score. The good scores are then used for you to move to the next step to get store credit. You get about 5, 10 total accounts, and then you move to fleet and cash credit, okay? So that is exactly how this works. To show you real approvals, for example, using Christine as an example, she got vendor accounts, paid her bills as agreed, then these are the approval lists that she's actually been able to obtain since. 5 grand at Tractor Supply, 8 grand at BP, 15 grand at Office Depot, 20 grand at Costco, $40,000 Best Buy credit card. We didn't know what it was when she got it, but then they sent her the letter telling her it was 40 grand. Sprint, all high limit accounts. Just got a $7,000 cash credit card she could use anywhere. Just got approved for a auto vehicle loan based on business credit alone without a personal guarantee, without a personal credit check. It's all possible because of 2 things. 1, credit scores, and 2 is trade lines. So she's got the scores, which is why she's getting the credit and financing, and she's also got the trade lines, as you can see here. $300, $500, okay? Not even big limits on here. Now, we've looked on during her webinar, her Equifax and D&B report, and she's got $15,000, $20,000 accounts on those reports. But on this one, she's got pretty small limits of $100, $300. But just because the fact that she has credit and she pays the bills on as agreed is giving her these high scores. So think about this, guys. Look at this. I want to show you this. She's being recommended for $16,000 worth of credit. She has no loans showing here at all. There's no loans. There's only credit cards. And the highest limit credit account on her Experian is what? $300. So the highest limit account on the credit report is $300. She's only got 1, 2, 3, 4, 5, 6 trade lines reporting here. These are all vendor accounts that are reporting. And because she's got 6 vendor accounts, even with small limits, the highest of which is $300, that gives her high scores, which gives her this. That's insane, right? Think about that, guys. She's got a $300 high as her high limit, and Experian says she should be given 16 grand because she's got trade lines. And this is what was being asked earlier when somebody said, I have an 80 Paydex. Well, what matters most is trade lines. The trade lines here, the fact that she's got 6, the fact that she's got, all paid as agreed is giving her the good scores. Then she springboards off those scores and then starts getting approved for these kind of accounts. And she's saying Universal Fleet card went up to $4,000 a week. So I've got to, do me a favor, email me that, Christine, because I don't even have Universal Fleet on here. And I'll add Universal Fleet on here. Actually, I'll do it right now. So you got now BJ's for $7,000. I'll change all this later. Universal Fleet for $4K weekly. And I'll update this when I get a second. Okay, so these are the kind of approvals, and Christine is doing this in real time with us, guys. So we update this stuff in real time. It's the fuel man you have. It's this one, right? Okay. So it's this one. So I'll update that. It went from $1,500 a week to now she just got raised to $4 grand a week. So she now has 16,000. Now remember, guys, she is in the transportation industry. That's why you see Universal Fleet. That's why you see BP. That's why you see Sunoco. That's why you see Exxon and fuel. These are all accounts she's choosing to get because they work well with her industry. You might choose to get other cards, not all the gas cards if you're in another industry. This is just what she wants. The same as Mark here. As you can see, Mark's got a big, he's not in the transportation industry. So he's dealing with office supplies. He's dealing with computers and other things, Amazon, stuff that you're going to buy stuff for a business. IKEA has a business credit account, for example. So that gives you guys a pretty good idea. Now, Experian, again, has 2 scores you need to know about. The financial stability risk score, which I showed you on a real report, and a blended score. They do have a score that people can get that blends your consumer and business credit score together. Boo, Experian, boo, you horrible people. We want to keep them the business name alone. But this isn't as popular as you think. It's not as big of a deal. And another thing I didn't mention here is your FICO SBSS score. So I might come back to that and do that another day because I didn't even put that on the board and I need to get it on the board. So a lot we learned today. Pay your bills as agreed. You pay your bills as agreed. The most common score in the business world, D&B Paydex, Equifax credit risk score, Experian IntelliScore score, all based on payment history. You pay your bills as agreed, you get a good score. Don't forget there are all these other risk factors which have to do with your risk of going bankrupt and that take into account your financials if they have access to your financials. If you have financials out there that are good, then you're going to have good scores here. Low bankruptcy scores. And you're going to have good ratings that have to do with your financials. And remember, how does all this work? We come in here, we get some vendor accounts that report, we pay them as agreed or early. When 5 of those accounts report, then we're coming up and getting store credit. Remember, never provide your social. Make them do it. Make them only pull your business credit report. Some will tell you they can or won't. Tell them you will not provide your social. You insist they pull that, and get some results. So boom, a lot of stuff we just went over today. This is all so doable. I was able to negotiate a contract for my business based off my business credit. So guys, Christine is been kind enough. She was the very first person that ever let me pull her business credit report. and she's been with us ever since. On here, sharing her results with us. She's an actual client of ours, I think a partner too. I think she's able to offer business credit with us as a partner. And she's been able to share her progress as we go. We've pulled her business credit reports. We've watched it grow. We've reviewed her DMB report, her Equifax report. She now, just in the last 2 weeks, has got a cash credit card. She just got a $1,500 limit account raised to $4,000 a week. She just got a dually, I think an auto vehicle based completely on business credit. And now she's saying that she just got negotiated a contract for her business based on her business credit quality. The possibilities of what you could do with business credit are endless, but you have to start somewhere. And Christine started with vendor accounts, as I've showed you. Then you moved to high limit store credit accounts. And now she's kind of rolling in money. She's got about $170,000 in business credit cards in the last 90 days. And now she's also got auto vehicle loans and all that stuff, which we'll continue to add to the board. That's why you build business credit. So a lot of stuff we've went over today. You've been able to see how all this works. You've been able to see a real business credit report to see how this maps out. We've been able to go back to the steps here to build business credit and teach you how to do it. So now you know everything you need to know about business credit scores except FICO SBSS. I missed that. I'll probably go into that next week and tell you a little bit about that because I forgot about that as we dive into consumer credit scores next week. So next week, we talk about FICO. We talk about the Credit Bureau Score Vantage Score. We start talking about the scorecards that the reporting agencies offer, why your mortgage score is different than your auto score, why your auto score is different than what you pull online, all those type of things. So hang on. It'll be an exciting week next week as we dive into consumer credit scores, teach you how to fix it, teach you how to build it, teach you everything you need to know about that. So I appreciate everybody joining us on this live stream. As always, I hope you walk away with knowledge you didn't have before you came here. But remember, knowledge doesn't do anything if you don't act upon it. So now take action and get moving on the steps we're telling you. Get your business credit bill, and you're a few months behind Christine, who's now getting $40,000 limit credit cards, vehicles, contracts, all based on business credit. You can do it just as she has. She's mapped this out in real time through our live streams, and I know you can have the same kind of success. As a matter of fact, if you want to see exactly what she did and how she did it, go to youtube.com/credit suite, and then just type in Christine or type in business credit into YouTube, and her webinar will come up. And with her webinar, we mapped out, and I'll see if I can pull that up right now just to show you what that looks like. We mapped out exactly how she did what she did. So let me go here to business credit. I'll go to YouTube, and I will YouTube business credit and see if this pulls up. Okay, so let me show you. I just went to YouTube here and I YouTubed business credit, and you can see here that when I YouTube business credit, hers is right here. How Christine got over 158,000 in business credit approvals within 90 days is right here. 2 weeks ago it was uploaded, got a bunch of views already. So if you go to look for business credit, you scroll down here, you'll see Christine's right here, and you can check out this webinar. And this is over 2 hours where she maps the exact steps of how she builds business credit. It's worth checking that out. I would. And remember, if you have any other questions about business credit, then you can go to creditsuite.com/Facebook. That's a great free guide that maps out the step of building business credit. Or go to creditsuite.com/consult. If you go to creditsuite.com/consult, you can schedule some time with us to talk more. We'll get you a free copy of your business credit report. We'll go over your Experian report with you. And we have a brand new service where you can opt in, get emails from us, and get text tips as well every week. Video tips that are 2 to 5 minutes that I only do through text. If you text the word tips to 855-982-1820, you'll get those text tips. You text the word tips to 855-982-1820. I'm pretty sure that's live right now, and that will help you there. Wrap this up, see if there's any other questions. Christine says we are changing web servers, so it's down for now, but up soon. Had to add a lot more information. That's perfect. Well, any of these approvals you get, Christine, email me, let me know, and I'll update the board so we can keep a running total of your progress. Thanks, everybody, for joining us today. Don't forget creditsuite.com/consult to actually schedule some time where we'll go over your business credit report, get your business credit scores, all that stuff for free. It won't cost you any money. And then we can talk to you more about working with us to build business credit, or even answer any questions you have to build it on your own. Thanks, everybody. Appreciate you joining today. Thanks for the likes. Thanks for the loves. Thanks for the engagement. And thank you very much for the shares. It means a lot. I look forward to talking to you next week when we dive in, talk more about consumer credit scoring. Bye, everybody. Have a good day. Have a good week.